Hey everybody, welcome to Mortgage Today for Wednesday, June 12th, 2024, and oh, what a day it was. Fed Day, and oh, what a glorious morning. UMBS were up 46 basis points in the first hour of trading. S&P futures were even up as well. They were up 6.75 points. We got the CPI numbers. Headline CPI month over month came in flat at 0 on a 0.1 forecast, down from 0.3 previously. Headline CPI year over year came in at 3.3 versus a 3.4 estimate as 3.4 previously. And then core CPI month over month came in at 0.2 versus a 0.3 estimate. It was 0.3 previously, so the year over year is now 3.4 versus a 3.5 forecast, down from 3.6 previously. Though as a reminder, the Fed wants to see that at 2. So if we keep dropping down 0.1 a month, it will take for fucking ever to get down to 2. Food index increased 0.1% in May after being unchanged in April. Energy index decreased 2% in May after rising 1.1% in April. Shelter index increased 0.4% in May after rising 0.4% in April. The owner equivalent rent of residence increased 0.4% in May after rising 0.4% in April. It's up 5.7% year over year. Pretty self-explanatory morning. Bonds were flat, and then the CPI came out, and then everything got a whole lot better. Separately, the 10-year note auction yesterday helped out and helped push bond yields. This news comes just before the FedEx came in at 2 p.m. We also got some debt news. So pre-COVID consumer credit grew by $15 billion per month and remained that way through December of 2021. During calendar year 2022, consumer debt growth jumped to $30 billion per month, but since January of 23, growth has steadily weakened and is now at about $5 billion per month, probably because the credit cards are maxed out. Moreover, credit card balances declined by $461 million in April, the first decline in 3 years, evidence that strain on low and moderate income households who rely on plastic more and less on their portfolio. And then we got DJ Fed. So DJ Jerome Powell went to the microphone to deliver information. Federal Reserve officials penciled in just one interest rate cut this year and forecast more cuts in 2025, reinforcing policymaker calls to keep borrowing costs high for longer to suppress inflation. Officials voted unanimously to keep the benchmark Fed funds rate in the range of 5.25 to 5.5, a two-decade high first reached in July. But policymakers signaled they now expect to cut rates only once this year compared to the 3 reductions forecast in March. That quick. According to the median projection, and MBS have moved slightly weaker. Fed officials' median view of the Fed funds rate at the end of 2024 is 5.1. It was 4.6 previously. Fed does not expect it will be appropriate to reduce policy target range until gaining greater confidence inflation is moving sustainably towards 2%. Fed officials' median view of Fed funds rate in longer run is 2.8%. It was 2.6 previously. Fed inflation has eased over the past year but remains elevated. No shit. Risks to achieving policy goals have moved toward better balance. Fed projections imply quarter basis point cuts in 2024 and current level and another 100 in 2025. No major surprises in the Fed announcement or the dot plot. They knew they would be pricing in fewer cuts. The median view technically moved up from 5.125, technically moved up to 5.125 from 4.625, but notably 5.125 is also the lowest possible rate seen at the end of the year. In other words, the dots were very hawkish, and they account for the modest weakness seen after the announcement. As discussed in the morning commentary, bonds rallied sharply after this morning's CPI data. Those gains held up uneventfully until the Fed festivities began. The most significant item on the Fed agenda was the dot plot, which showed the median outlook of which showed the median outlook for 2024 rate cuts falling to 1 from 3. Fed Chair Powell offered no dovish reassurances in the press conference, nor was he even very enthusiastic about this 1 month of data. All of that is to be expected, but markets nonetheless acted like they expected at least a little token right rally affection. By 4 p.m., about half of the CPI gains had been erased, and it was still a solid day in the bigger picture of things. So UMBS closed the day up 24 basis points, which is down like 20 basis points from the highs of the day. So at 100.63, that does put us up in kind of a new range. So we're up here with that really tough Fibonacci line that we've broke through for a handful of days back in March, but it's been a pretty hard lid at 100.872. We basically bounced into that and held today, and then at one point we actually opened up. We were down here by this dual floor at 100.386. So we tested both ranges today and decided, yeah, we'll just stay right up in the middle here.